European stocks hit one-week highs as fears out of Portugal and Spain have no impact on markets yet. Futures up near prior highs ahead of Fed's FOMC statements. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with theStreet, and together we bring you the morning call. So Scott, we're opening near prior highs today. No one's really minding the news about out of Spain and Portugal. So how impressive is things right now?
I think the market's acting very constructive. Yesterday we had a pause, we had a little bit of an inside day digesting the huge snapback that we saw last week. You saw some rumblings out of Portugal, some rumblings out of Spain, things that we didn't quite want to hear after putting Greece on the side for now, but they're not too loud, they're not affecting the markets, but you have to always know they're there, and when they start to affect the markets, we'll know. But right now we're knocking on that door of the prior highs around 1378, so it'll be very interesting how we handle that going into the Fed later today.
Right, and speaking of days when we have such light volume as we did yesterday, what should our game plan be when we're seeing light volume?
Well, with light volume and digestion, it all depends on the day, and especially after a snapback like we saw last week, you just want to keep your cool. You don't want to overtrade. You want to make sure you can enter stocks. You want to judge the action. And judging the action yesterday, I thought it was very bullish. And if you look at the chart here of the S&P, you will see that, here are the two trends that I talk about. I like to always show. Here's the gradual trend for the macro investors, intact, not even tested during last week's little pullback. Here's that momentum trend that guys like me tend to follow, that try and hold multiple positions, that got a little scary last week, right? We closed below the 10-day. Last Tuesday you were here. We weren't sure where we would go as far as the correction. We went down to 1340, this point of reference, and then we had a nice little snapback. And then yesterday, we took it in stride. Yesterday, I know a lot of my traders were a bit frustrated because there was not a lot of action, but overall, on a constructive basis, market held above the 10-day moving average, market held higher, and now we're looking to take out this 1378. And if we can close above that level, and you're rolling up your shorts as a bear here, not using, not letting the market confirm your thesis, you could be in a bit of trouble today.
Now, if we do close above that level, what's the next level beyond that?
Well, we have to go to the actual monthly charts because finally we can look a little bit more long-term for the S&P. So if you look here on the monthly time frame, you will see, you guys remember I talked about this potential double top, that this was an area that the bears would say we could have one just like we saw way back when, back here. This was that double top from like the last decade that controlled the market to the downside. So right around here, you had this short-term potential double top that at first we got there, we couldn't bust through, but now if we can close above 1378, the next real point of reference here is about 1404 and then 1440, and this actually was my target for the year, and I think a lot of people's targets for the year are getting met early, so you have to figure out on whether or not you raise them or you want to take it and run, but we'll cross that bridge when we get there.
Now, you mentioned the Fed meeting today. What could the Fed say to keep us from closing at those highs?
Well, I think overall everyone loves to try and sell the Fed day, or sometimes they try and sell the day after. I think that the language is going to somewhat stay the same. I think that they're going to have to say that the U.S. data is getting a little bit better, and if they allude too much that they're getting out of the way, there's no more QE, and potentially even that they might raise rates sooner than their forecast of 2014, you might see some type of sell-off, and then we'll have to judge where we go in. But I think that they're going to try and keep this rally intact. They've worked very hard to keep the constructive nature moving forward so they could have this wealth effect, so they could have the hiring come back like we've seen recently. So I don't think they're going to throw a big curveball, but some yields on the 2 and 10 year in the bonds are starting to nudge through those inflection points. So I want to show you real quickly with the TLTs, because guys that trade, you could see here that if these TLTs start breaking below this key area here, or the TBTs get above, you're going to see some reshuffling in bond holdings and stock holdings, and some people are going to have to change some footing there.
And of course, there is a slew of other economic data out this week. On top of the Fed meeting, there's also retail sales. We've got the bank stress test this week. What economic data are you trading on?
Well, I'd like to see the retail sales come in line or a little bit above. This has been a very strong group, a group that has had breakouts, a group where if you look at this ETF here alone, it's already at new highs, where you saw the S&Ps just knocking on that door. The RTHs during this pullback held the 10-20 day, was the first to break out. You saw stocks like Lulu, you saw stocks like Under Armour, Target, Walmart. There's been a lot of participation in different areas within retail, so it's rewarding investors and also traders. So I like to see those numbers come in line, so this way there's no curveball thrown at that group. And with the financials, they're also acting well. If you look here at the XLF, you go right here to this group. It also not as quite as strong as the retail group, which is already up and above it. But if this starts to get to above 15, you're going to see another move in the financials, and we've seen very good action in the likes of your JP Morgans, your Wells Fargo, and some select others.
All right, well, let's talk coffee stock, Scott, because it's early.
It is early.
So let's talk Starbucks first, because, of course, the news this week that the chain will start selling single-serve coffee brewers. There's been a ton of action in this sector alone. What are you thinking about Starbucks right now?
I think Starbucks has been an unbelievable vehicle ever since it went public. You know, different cycles along the way. It's at new highs. Jill had a very good OP type of video, I think a week or so ago. If you look here at the chart, it's rewarded a lot of long-term investors. And then watch what happened here on this day. It had a nice wide range bar to close near the highs. Guys like myself, some people took it long, and then you had some nice follow through. So even as a trade, this worked pretty well. And at this particular point, I think if you're a long investor long-term, stay the course. I think as a short-term momentum trader, it needs a little bit of time, and once it starts to get back above 52, it can go again, but it does need a little bit of time to digest this last breakout move.
And of course, Green Mountain Coffee got knocked on the Starbucks news. So I think the question with this stock, of course, is do you believe Starbucks will ultimately take market share away from Green Mountain Coffee?
I think the valuations have always been I would say checked here, and it's been more of a shorting vehicle, and you know Herb's all over it and this and that. It hasn't been a good investment vehicle, and whether they eat Green Mountain's lunch or not, at this particular point the stock is broken. It's a trading vehicle to me. It's not an investment. So if you're an active trader, there are some trades here, but I wouldn't be stepping in. It's a little bit too dangerous. If you look here at the chart, last time it looked somewhat constructive was right here. It had this nice sideways consolidation going, had a big gap, and the question was you could stay long if it stayed within this gap, and then all of a sudden broke below it again, and right now it's below all the moving averages. I would just avoid this, maybe make a little cash flow here and there, but it's not ready for a risk-averse investor right now.
And what are you thinking with Dunkin'?
Dunkin', I love the stock. I think that there's a lot of opportunity here for both traders to learn how to trade it, and also for investors that are looking for a new issue that's about 9-10 months old that in a few years from now could be a lot higher. And if you look here at the chart of Dunkin', which you do drink that coffee every single morning, you look right here, this is when it went public, right? This was back in August, went to as high as almost 32. Since then, you need institutions to accumulate. You need people to buy it. You need stocks to change hands. You need people out of the deal, those players who flip stock who aren't involved for the long term. So right here is when it ignited for the trader above 29.50 and 30. It did touch the highs yesterday and wasn't ready to get over it just because of the path that it traveled was pretty far. But I think as long as it stays above this 30 area for traders, I know I'm going to try and be long. At some point, I think it gets above 32 and continues. And I do think, look at it's an infant. This stock is an infant in the public arena. I do think in a few years from now, you could have a $50 number, put it in the drawer if you want to look for something investment-wise as well.
All right, well, we don't want to leave anybody out. So Coffee Holding Co. JVA, are you long this stock?
I am not, but this just shows you how to approach the market differently. There are guys that could see volume, can see an alert go off, and just go to it. And since the coffee group has been so in vogue, people were waiting for this to happen because JVA was a very hot stock last year. It's been out of play, but look what happened a few days back. JVA had a big volume spike. If you look here, we love to see when this happens. Stock's been in a lower tight range, really not doing much, and then look at the size of this move. This was a really big move, put it on the map, and then you had follow through yesterday. At this point, you had a nice 2-day move. I would just say if you want to buy a pullback, if this thing is really strong, it probably does not break below 12. It's going to need a little bit of a flagging type pattern, and then if it were to get above yesterday's high, it can continue. I see some big resistance coming in right around the 20. At this point, the fast money trade already happened. If you were on your toes and you bought it this day, you got paid. Now it needs some time to flag and then potentially get above this 14 at another time.
All right, and Caribou Coffee Company, if we take a look at that chart, where would the support be there?
You know, I actually haven't even looked at this one, so I'm interested to see what it's done while all these coffee stocks are all caffeinated up. So if you look here, you will see This stock, no wonder why I haven't looked at it. Not really much action here, just kind of trending lower. It's at the 16. I would say if you had to be long it, which I don't think you need to even look at this one because it's not acting that well, you could be long versus 16. But if it breaks this, you could see it move back down to 15. It's under the moving averages. I don't like this one out of the group.
All right, well, we want to talk about the haves and the have-nots, the leaders and the laggards, and we will do that right after this.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, we're talking the leaders and the laggards, the haves and the have-nots. Scott, I know we always trade the leaders, but is it okay sometimes to try trade the laggards?
It is. Okay, what we like to do is we like to invest in the leaders. You like to hold stocks, holding above their moving averages, showing relative strength, that don't pull back too much when the market does. And you want to stick with those longer term because those will reward you and they're a little less stressful. There are times also to trade for cute cash flow, some laggards, but sometimes they're just trades and they don't amount to much. So you really have to know the difference. And as a trader with only limited real estate on your trader sphere, you have to make sure that it's worthy of your attention. And as an investor, if you're working and you have other professions, you don't want to have to look too closely, so you want to make sure that you're in the best of the best and not that laggard. So the first group we're going to get into is what?
CF Industries versus Potash. Now, CF Industries, of course, reported a blowout fourth quarter recently. We've had some bad news out of Potash. So when you compare these two charts, what are your thoughts?
Well, it's interesting because Potash, POT, has been something that, or a stock that has always been on the traders' back burner. We've liked to always trade it. It showed leadership the last few years. This year, it's been a laggard. Okay, so if you look first at CF, which has been showing some leadership, look here. This stock has been helping to lead the group. Not a blockbuster. This group as a whole hasn't been so great, but at this particular point, this is above the moving average. You have a little bit of a wedge type pattern here. There's also a pivot. So I would say as an investment vehicle, this one is definitely better than Potash. And if you look here, the high here is 184.16. As a trade, if it starts getting above this, what's that high there? That high is my old eyes, 184. It starts getting above this. I think traders would try and get this for some momentum. And then obviously the prior high is another pivot. So this one looks good. And if you look at it compared to a laggard, you look at POT, this stock closed on the lows yesterday, right? Closed in the lows, below the moving averages, showing resistance. Not a lot of excitement. I do think that if we do sell off it somewhat in the market, this is more of a short below 43 than an investment vehicle to the upside. So watch this pivot. If you're looking for something to short, market gets weaker, this is on the radar for that.
All right, well then in terms of the financials, JP Morgan, of course, has been a leader in the sector. Morgan Stanley, not so much. But first, Scott, are you going to be trading the financials ahead of the bank stress test, or are you going to wait till after and find out the results?
I'm long Bank of America actually right now. I was long JP Morgan for the majority of the first few months, and then it got extended and I sold it. And one of the problems is if you sell a winner, it's hard to get back. And I talked about guys on my desk yesterday. I'm like, oh, JP Morgan's a little weak. Buy it on the 10-day. I did not. Some guys did. I can't be everywhere. But I think you can be in these banks. I think if you methodically buy them, you're going to get rewarded. And if you look here at JP Morgan, you will see that this stock has been it's been working out very well for investors and traders. This was when it broke above this descending little channel back in late December when the market rallied or ignited. Here is when it broke above resistance. Right around this day was when Warren said he put it in his PA account. And look at it, at new move highs yesterday, well before the market, and then it also held a 10-day. So I do think if you go a little bit more monthly on this, oh wow, we have to go to a lot of monthly charts now. There is some room in this to get up to what could be almost a $50 number this year. And as far as Morgan Stanley is concerned, we did here's a thing. When the banks were going and everything was working, okay, what could go next? And the problem is if you take a laggard and the market's not ready, you can get hurt. I actually tried buying Morgan. I got stopped out and it didn't work. So at this point, Morgan has some things to prove that it could actually work out for you. Now we talk about sometimes a trade here. I do see a small descending channel here. Here is the downtrend line that's been controlling it. Here is your support. Here's a mini little pivot. So I would say this could be on your radar as a trade if it gets back above 1870. And if it can close above 19, maybe it starts acting better. Maybe you see some action in Goldman Sachs or whatnot. But for right now, it's a bit of a laggard. But this pattern's getting a bit more interesting to me above, again, 1870 and 19. Perhaps the next level is 20. And then at some point, it takes out these highs here. It is lagging, but at this point, it should be on the radar.
All right, well, when it comes to tech, IBM, of course, at all-time highs. Now, compare that to, say, a Hewlett-Packard.
Right, Hewlett-Packard has just been in the basement. Everyone's trying to figure out reasons to buy Hewlett-Packard, and then it always upsets you. IBM, for the decade, was one of the mega caps that actually had follow-through. As an investor, you got paid to hold IBM, and now you're starting to see some of the other mega caps come around, so people want to reach for the laggard. If you look here at IBM, which I am long, and it's been a frustrating trade. You had a few good moves here. This was a nice tight pattern. This is when I was talking tier 1. This is when it ignited for cash flow through the prior resistance and then held above, right? Not so bad. I know it wasn't a great trade. I bought it a few times. The highs didn't work. Finally went. Here's your Tuesday. Now we're back at the highs. I'd love to see this extend to like 203 to 205 today, and I think that would be gratifying for some of the guys who have been sticking it out with IBM. And as far as Hewlett-Packard, it also, if you look here, it's just a laggard. It's not worth your time. It had to move back up, didn't really fill the majority of this gap, and it's been just trickling and trickling and trickling. And if you want to call yourself a value play, which to me means that you're willing to hold something against you because technically it's not ready yet, you could do so, but do so small. You're going to have to wait for some kind of igniting, some kind of something here to get this going. But at this point, it's an avoid. And if you love it for some reason, which I wouldn't know why, you buy a tier 1 and then figure out and let it work out for itself.
All right, now really quickly, Apple at new highs. How are you trading it?
Apple gave you a nice cute trade through 350, and then it pulled back a little bit. At the end of the day, I went long again. It's up $4 or $5. What I typically do is I take half off going into the gap up, and then if I see the composure stay the same and they can't fill the gap, then I'll trade it more to the upside. Typically on a quad witching, sometimes what they do is they push it the beginning of the week, get people to pay up for the 580s, 590s, 600s, and then they pull it back a little bit. So just be on alert that it's a little extended here, and you don't want to chase it. But also anyone trying to short it without a plan is getting hurt, and as of now, every sell has been a bad sell, but I will sell some into this gap up today.
And LVS lagging the market in the last 2 sessions.
Yeah, but it's had a big run, and this has been really good actually in the last week. You had that move we talked about with Mad Money with Jim, which went really high, and then we had that cute buyback. Let's go. I think actually Win was upgraded today, but we'll get to that. You had that cute buyback on Tuesday into support after this reversal on that Friday. Quick move up halfway through. I actually got short on Friday, covered yesterday, and now I would think if it could start getting back above this area, some momentum can come back, and then that's when it could potentially break this upper wedge to the upside. So it's been consolidation mode after what's been a really big move. And as far as Win, I got to touch on it real quickly because it was upgraded. It's worth a look. It also had that big move when it broke above this 118 area. Okay, now we actually came back and just retested it. So if we could start to get above this 122 to 125 and hold above it, perhaps it gets back on its horse and could test that old resistance that it hit on that exciting Friday about a week or so ago.
All right, and the gold miners, GDX, hanging on to the low end of that range?
Yeah, but I would just avoid the miners. I'm sorry. Every time they think that they look good, they just disappoint. If you love a particular stock there, just make sure you do your research. I'm not even going to put up a chart.
All right, and Zynga. What do you think of Zynga?
Zynga, I'm holding. Yesterday, I didn't like the technical action. I have a lot of sales traders I talk to, and they think that as we get closer to Facebook, there's so much excitement there. They're thinking 18 to 22. For me, I'm in a tier 1 in Zynga, and I'm not going to start adding to it until it starts getting above this level with some volume. This level here on Zynga is 1447, so above that, it can continue. Right now, this short-term topping tail has controlled it, so as long as it stays above 1340, stay long. I think you add above 1440 for what could be some nice momentum moving forward.
And FIO, is it time to buy again?
FIO, I've been avoiding, but guys are talking about the action there, and it looks okay. If you look here at the chart, actually, maybe I will look at this today. Look at this nice little wedge pattern. Okay, it's had a big move off the lows, following this uptrend above 32 or so. This can get some more momentum to the upside. So I will actually put this on my radar. This looks like a nice setup today.
All right, glad to have put that on your radar. So besides FIO, no problem. Besides FIO, and of course a busy day ahead of us, a busy week ahead of us, what's the one thing you're looking at? I'm sure there's many things you're looking at, but what are some of the things you're looking at today?
I want to see how we close today. I want to see how sometimes they run them into the Fed and then they try and sell them off, and that puts in a little bit of a reversal. If they happen to try and sell off after the Fed and we close at the highs or above the recent highs, I do think the shorts that have been rolling up their position are going to have to chase. And I do think that people who are waiting for a bigger retracement versus a 25% fib that we saw last Tuesday, they're going to say, oh my goodness, I have to start buying. So I think today's close is going to be important. I went back on, I think it was Thursday-ish, to a more portfolio approach again. Not quite the 10 to 18 positions like I was holding, like 5 to 7 with the hedge to stay with the rally, because that snapback proved to me that you could hold stocks, still just have a hedge and make sure you don't fall asleep at the wheel.
All right, good stuff. Thanks, Scott. Happy trading, everyone. Have a great day.